Welcome! In this section, we'll be discussing taxes, Social Security benefits, and COLAs in retirement. Benjamin Franklin once said, "In this world, nothing is said to be certain except death and taxes." So yes, your retirement allowance is taxable, and you will be taxed according to whatever tax bracket you fall under once retired. The federal government will look at all of your sources of income to determine your tax bracket. So, if you are collecting the Lacer's pension, disbursements from a 401k, or are receiving a Social Security benefit, all those amounts will be added together. State tax will vary based on the state you happen to reside in while retired. If you don't live in the state of California, then you are not subject to California state taxes, but you are subject to whatever rate the state you reside in requires. Your address on file with Lacer's should be accurate in order to avoid California state taxes if you do, in fact, live in another state. Curious about the tax rates of other states? Head to the website listed on this slide to view a breakdown of the tax rates for all 50 states. And for those of you who plan to reside outside of the country in retirement, you must still pay federal taxes, but you will not be subject to state taxes. You might ask yourself how your monthly retirement allowance will stand up to inflation throughout your retirement. Lacer's is aware that inflation decreases your purchasing power, and there is an inflation component in your Lacer's benefit through cost of living adjustments or COLAs. The COLAs are based on the Consumer Price Index for the Los Angeles area only, and are not based on where you live. For example, if you live in Hawaii, you still get the Los Angeles area CPI. Retirees all receive the same COLA at the same time. July 1st of every year is when the new COLAs take effect. The COLAs can increase your retirement allowance a maximum of 3% per year per LA Administrative Code, and excess CPI over 3% is banked for future use. Here we have a historical overview of what Lacer's retirees have received as COLAs. The key thing to notice is that whenever the CPI is over 3%, the difference is held in a COLA bank to be used during a year when the COLA is not a full 3%. There is no expiration date for this COLA bank, and it is automatically applied to members' accounts to boost them as high as possible when needed. While many city employees have only worked for the city their entire life and will not receive a Social Security benefit, those who had a previous career in the private sector and are eligible for Social Security should be aware of the next two provisions. The first is called the windfall elimination provision, and this potentially impacts you as the member. What this says is that if you are collecting a Social Security benefit and you're also collecting the Lacer's pension, then your Social Security benefit will be reduced because you are in possession of a government pension. The other provision to be aware of is called the government pension offset, and this can potentially impact a surviving spouse of yours. Let's say that you, the Lacer's member, passes away, and your spouse starts receiving your Lacer's benefit on your behalf. So, if they are collecting a Social Security benefit, and they are also collecting the Lacer's pension, then their Social Security retirement benefit will be lowered because they are now in possession of a government pension. Lacer's staff cannot answer questions about Social Security benefits, so we highly recommend that you contact Social Security directly to get accurate information before you retire. Have a question? You can always reach out to Lacer's for assistance by phone or email. We look forward to hearing from you. There's even more to learn about your benefits. Watch other retirement topic videos on the official Lacer's YouTube channel.